Obermeyer Wealth Partners, Flynn Phillips is taking the mound for a fast pitch. Obermeyer was ranked 13th on CNBC's Financial Advisors 100 list. Great to have you with us.
Great to be here.
What's the catalyst when they're sorry, Adelie? What's the catalyst here for Sherwin-Williams when there's not seemingly no catalyst for the housing market?
Yeah, to us, Sherwin-Williams is the clear leader in paint, and they continue to gain share from weaker competitors through their store build-out and their direct relationships with contractors. Look, the home improvement market has really struggled, but if you see any easing in rates or a pickup in existing home sales, we think that should unlock a really powerful repaint and remodel story. The company recently just announced a 7% increase in January, which will flow straight to the income statement. We don't believe analysts are modeling that. So to us, for 2026, it sets up a real earnings and margin expansion story as we exit this, what's really been a historically bad housing environment.
It does seem like analysts were modeling in a 5% increase in price and not the 7%, so you have that 2% upside to be had. But at the same time, going back to this notion of the housing market turning around, you said it will unlock, if there's a turnaround, if there's a drop in rates, it's going to unlock a renovation, a huge cycle. Is that what we were waiting for?
Well, the nice thing about this most recent quarter, you've actually already seen some improvements. So some of this turnaround's happening. It's just something that actually really should give it some reacceleration and allows it to be more bullish. Even within the current environment, the company continues to execute. This is just something which actually could unleash in terms of more margin expansion going forward.
When I look at revenue, you addressed this slightly. Revenue has been stable, but net income has been increasing up 12% or so. So that's what I'm keying on as far as the efficiencies. And I don't want to call it a turnaround story, but unlocking net income seems to be a canary in the coal mine for me when I'm looking at it. Do you agree? Is that what investors should concentrate on more than revenues?
I would agree. Not only net income, but also just their pricing power more than anything else that it really allows them to be able to keep with this margin expansion. So that's going to be more of a catalyst than potentially just looking at the revenue line.
It's good. Thanks so much for being on. So let me ask you, if I look at Lowe's and I look at the PE multiple there, and I look at Sherwin-Williams, which I know it sells through Lowe's, not Home Depot, what do you like better about Sherwin-Williams than Lowe's?
Just like in terms of Sherwin-Williams is more of a direct exposure to in terms of the actual repainting or cycle. Lowe's, as we all know, in terms of has some other products in there. So we'd rather have a direct play in this environment. And actually, we like Home Depot over Lowe's, but that's a whole other conversation. But do think that Sherwin-Williams is a better play within the sector.
How important is the professional, the contractor business for Sherwin-Williams specifically, Allie?
That's in terms of what you're going to have in terms of more stability going forward. Contractors tend to be in terms of very focused on quality. They don't switch relationships as much. So we think it is key. But more than anything else, it's probably just going to be the overall backdrop or improvement within the remodel sector.